Hi there. VeChain is down by about 15.5% this week, and it has challenged staying above the 0.0084 yellow key level. Let's take a look at it through the Wyckoff lens and see what are the whales actually doing. If you're new to my session, I'll cover the Wyckoff stage, potential price trend change, as well as key price levels. This is education content only, not financial advice. The weekly chart of VeChain is showing us that it's once again back down to the range between 0.065 to 0.0084. So last week, it tried to get close to the 0.0096 level, but it got rejected this week. Here, the 0.0096 was actually where the October 10th tariff announcement day tested. Not only that, but if we go back to the history of VeChain back in 2020, that was also the level around the trading range top of the accumulation cycle back then in 2019 and 20, and also the low point when the price retraced before the price gets to the 2021 distribution peak. So that's a very key, I would say, intermediate level. It's not a key level because that's not exact top, but it's got sufficient reference points that we can't ignore. And that's also where we see rejection came in for the past 3 weeks. And last week's candlestick came in with just very low volume, almost like a quarter of the previous 2 weeks. That's a signal that this price climb may not sustain. The good news, I was saying good news among a 15% drop is that this drop comes with a volume even lower than last week. So overall, combining what happened over the past 3 weeks, I would see these as a stabilizing sign around this yellow key level of 0.0084. Okay, so range bound between 0.00655 to this 0.0084 key level shouldn't be surprising. Okay, unless the economic data in March from the US is going to surprise the market. Otherwise, this range, 0.0065 all the way to 0.0096, it's the base case. Okay? Now, getting back to the daily chart, micro view. While we're still in the testing period in terms of Wyckoff, where the whales are going to shake out the paper hands. So the downtrend is still continuing. The price is still traveling along the center line of the downtrend. So we mentioned quite a number of dates. These dates are potential price trend change confirmation, meaning that when the price trade towards these triangles, it only has two choices. It either breaks outside of the ceiling of the downtrend. Okay, the downtrend started in October, by the way. You can count all the way into late September, but October 10th just pushed it to another level. So breaking the ceiling of this downtrend, or it's going to get rejected by the ceiling and go challenge the lower support levels. So only two options when it gets closer to the tip of these triangles. So Feb 21st, we are exactly on this date. Unless miracle happens in the remaining 5 hours, this candle is not going to make that mark. Okay, the next window comes in 2 weeks' time, around the 6th. But again, it's a bit stretched given the volume we're seeing is very low, both when the price goes up and the price comes down. So there's no one-sided advantage for the bulls and bears. So assuming it is going to stay the same, then it's more reasonable to look at the next window, somewhere between 21st to 31st of March. Those are the opportunities that are more reasonable given the price movements lately in the past 2 weeks. Like I said, unless the US economic data that's going to come near the end of this month and getting into March surprises the market, and we have to change the windows or the opportunities that we're going to target. Okay, if you're interested to access these sessions 2 days earlier, join the channel membership now. Here's another analysis for you. Thank you.